Shout out to all the VIP. This is London with Bitcoin Spike. Hope you're doing well. We are about T minus 30 in terms of the close for equities today on a day when Powell and company were in Jackson Hole, Wyoming to deliver some remarks. We're going to talk about NVDA. We'll talk about Bitcoin. We're going to talk about Solana. And also we will talk about Tesla. Tesla in an interesting pattern right now. Part of the reason I wanted to stream particularly was the fact that Tesla seems to be in a bit of an interesting pattern right now. Brought it to the VIP in the back earlier on today. Hope you are all doing well. And special shout out to Venus. Venus, it's London. Hope that your day is going well. And yeah, a lot of thoughts and prayers with any and all VIP guys as we roll through mid-year, summertime, busy time, especially with any family, friends, etc. Not to get into any details, but Venus, our prayers are with you and your family as you go through a difficult time right now. That goes without saying, not to overly focus on that. We can focus on the market and try and think about good things for a bit. Let's talk about NVIDIA. Let's talk about NVIDIA. Yesterday, nice action. I want to discuss a few things today, and what we're going to discuss is the following. I want to talk about particularly the reset button came to mind. I thought that was a good thing in the market. Let's talk about a reset button. How do you re-engage in the market? What are your expectations to start with if and when they get blown or they go great and you overperform? How do you reset? How do you kick the dust off of a great trade? Believe it or not, it's important to kick the dust off of a great trade or a bad trade. We'll go through that. Also, I want to talk about the show. All right, what is day trading? Are you a part of the show or not? And I mean the show, not a side show. I want you to be a part of the show. All right. You guys know I'm a former hedge fund owner, private, non-SEC, not financial advice, financial professional for a number of years, probably too many years, decades, I believe. I want to let you guys know there's the show and then there's the side shows. I want you guys involved in the show and focusing on New York Institute of Finance, Volkowski, et cetera. You guys are equipped to succeed in the guys with the parameters with the best that I know of. So let's talk about NVIDIA. As we were to discuss yesterday's blowout earnings report, it was nice. I really believe that everybody being loaded up into NVIDIA with all of the positive sentiment may have had to do with the fact that there was a bit of a drawback. And I was a bit skeptical when we were up 8% after the earnings released. And I told VIP, I was like, well, we need to make it through the night. This was after the bell closed. We have to make it through the night, and then we have to open, right? So it did fade in terms of the max projection. What I was looking for, and we're going to talk about this very importantly because I want to discuss this. My max target, we got essentially about 50% of the way there. Okay, this is what the market specializes in doing this. I'm looking for this top line resistance here, right? We actually got to, and please apply this to whatever you're trading, to Bitcoin, to altcoins, to whatever equities. You guys know, not financial advice, but digging through this, I'm presented with the issue, well, I didn't reach my target here. Boom. I want to max this sucker out. I want to get all the way to the top. What did it provide me? Essentially, from the entry point that I brought to VIP, and just reckon into this a little bit, apply this to whatever you're looking at, is the fact that, yes, well, it offered me 50% of my target. Some of the best moves in the market, you will understand in VIP, you know this through Volkowski, et cetera, is the fact that the market is an expert in offering you 50% of what you want. 50%. You want the 100%. The market is going to specialize in giving you. How about 50%? And it's built around those opportunities for you to look at it and say, no, I want to push it, right? You're going to get to the point and be like, no, I want to push it. You guys know me. I'm pointing, I'm pulling, I'm driving for this top line. But the open, boom, and we went through the details on this is specifically into right at the 50%. Max probability is 50%. What do I mean when I say that? Please listen up. When I say a maximum probability, more probable than not, the maximum probability, right? Normally 60, 70%, sometimes 80% of the time, depending on the pattern framework, 80% of the time, up to that percentage time, we're going to hit the 50%. Everybody is looking for that full completion to the upside. You know this. Everybody wants that nice journey up. Boom. The whole world wants the full maximum amplitude move to the upside. And what the market do? Well, it stops short. It's going to make you dance that dance. It's going to make you decide I want to push it, I don't want to push it. And some of the biggest regrets in the market as you trade, as we trade, as you look at it, is to look past, well, it's going to take another couple days to reset. It's going to take another week to really give me a good pattern. So those considerations need to be built into your decision making when you look at, well, it's offering me half of what I want on this trade, right? Let another pattern develop. You don't always have to gang bust it through to the max level of resistance. This was a nice carry up. It was a nice trade. We did bring this in the back, just FYI. Just so you all know, if you missed it in the back, we brought this 50% completion here, and VIP, you know for a fact, right? You absolutely know if you're looking at a 50%, it's like, well, there's that maximum probability without a doubt. Okay, so NVIDIA hit into that. What I'll say is I'm a little bit excited about NVIDIA because we're going to be able to trade this. You guys know with this, I'm going to say this different, a bit of a different pattern architecture, we will be able to trade in this zone. If you don't like your pattern formation right now, just hold on. You'll get an additional pattern to trade. Excited, boom, that we picked up on this specific line. It looks very natural now, but it wasn't there prior there too. Let's take a look at that daily. Yes, that daily for right now, 20 moving average is holding on NVIDIA. Very important level. That daily 20 moving average is holding. So we're technically still green on NVIDIA. All right, let's take a look at Tesla. Tesla is something that is probably attractive right now. And we'll go through Bitcoin, but Bitcoin doesn't shut down in 20 minutes with equities, okay? So that's the advantage as we look at rolling into a weekend, a VIP weekend, right? What we're going to be doing is assessing this as to whether or not you would want to maintain a position in, let's say, Tesla over the weekend. You guys know, you rock and roll it yourself. You let me know what you're going to do, okay? I value your assessment. VIP is all about that, guys. In terms of being able to make your own assessment, that's fantastic. I'll tell you what I see in the charts. I've been looking at them for, guys, since high school, heavily since high school. So I'm one of those long. Just had to do it in high school. Some of you guys are probably like that with different things. So as we look at the specifics here on Tesla, we're looking at a nice curvature and handle. We like it. I'm going to say this. If you own it lower, and of course that's my answer. I'll tell you, even on NVIDIA, and the guys in the back, they know this, but even on NVIDIA the night before, I'm like, look, if you own it lower, great. We were nearly at an all-time high. I'm like, I'm never going to tell anybody to buy high. It's just against my mantra. It is against my MO in the market. Why is that? You saw on NVIDIA, boom, blast through earnings. Everybody's excited. If you entered in, fantastic. But you also saw it that same day push back down through your entry nearly. So don't sweat that, get involved lower. And yes, you can find those opportunities to get involved lower. I know you can, because we do consistently. It takes a lot of negotiation, rough water sometimes. The biggest challenge you're going to have when you're trying to enter lower, you know this, is trying to not only just navigate, as you would look at the technicals and navigate through the technicals, work them into the macro and the micro in terms of extensions or targets. The ultimate question that you have as a trader is to try and negotiate into larger positions with lower amounts of risk. You guys know that. You want the larger position with less risk. And I'll just say the risk that could chip away at even through your entry process, right? Your entry process, as you try and maximize your exposure in your profit equation, what you're going to be looking at as well, that means I need to maximize my entry. Okay, so the better that you get, the more skilled that you get, you will develop processes. We're working on higher margin, tighter stop losses in the back. I don't hear anybody talking about that. I hang out with a lot of pros too. I'm going to tell you guys, they suit and tie pros. Okay, you guys can trade, but I'll just tell you, as you were to look at the issues, you'll get the nod along from everybody. Oh yeah, the probabilities. Oh yeah, the maximum margin, higher margin, tighter stops. Oh yeah. You'll get a lot of nod along believers as you talk about these specific issues. Very few people, very, very, very few people really implement these tactics well enough to discuss them and throw them out, bam, just at will into the market. So as you develop that, give yourself some time, give yourself some patience in terms of developing those skills. They're highly sought after to the extent that a lot of your trades will amaze the suit and tie crowd. Okay, it will amaze those guys. Okay, they'll definitely give you the props in terms of the just the skill set that you're going to be able to develop. So that challenge again is what? The challenge is to involve more cash with less risk. Okay, with less risk of loss, just saying, and start to calculate, start to think through how much will each of my entries cost me here. If it doesn't pick up, what is my flex, right? What is the level of the flex on my position? How much room am I going to give the trade to draw me down in terms of paying to be a part of the trade? What's my stop loss, right? We like high precision moves. As we're looking into these levels, we like to try and catch this here. Now, as you were to look back at the architecture here, and yes, we have a potential cup and handle. It's an interesting moment for Tesla. It's one of the reasons I wanted to specifically stream today. We have this flat top resistance, we have this curvature formation, and I'll just say, you know, that Tesla has been very cooperative in terms of these patterns on the micro, nearly on a daily basis. Tesla has enjoyed paying traders on the 3-minute, 5-minute, 30-second, 5-second time frame on small cup and handles. She'll throw them right and left and kind of let you be a part of a few of them. Some failures in this zone, but as we recoup and as we're up against a preceding level of support, that the natural phenomenon is occurring here, which is to guys flip from support into resistance. But as we look at this pattern framework, the ultimate consideration here is, and I know you don't like this answer, but it is the right answer. Do you own it lower? Bottom line, do you own it lower? And as you look at the next week or trading throughout the weekend, all right, as you look at trading throughout the weekend, start to, and I got a great question yesterday. It was, and J-Mac in the house. What's up, J-Mac? Nice to see you, brother. Nice to see you, boss man. What's up? Good to see you, J-Mac. I appreciate the shout out. And any VIP that don't catch this right now, that for whatever reason you're busy, we look forward to you. I'm not sure you can shout out in the comments. Maybe you can or can't, but after the fact. But J-Mac, loud and proud. Nice to chat with you, brother. Always. So the question is going to be, and as we talk about tactics, we talked about, well, margin. We talk about higher margin with tighter stop loss. We talk about that's something that we've just kind of really worked into the mix the last couple of weeks. I'm excited to see you all engage in that. We've also talked about carry trades and flash trades, right? I say a pocket trade, something you're going to put in your pocket, right? That would be like a carry trade. A carry trade would be something that you're looking at carrying. Now, if you were to combine, let's even say potentially a managed future, okay, that could be different than your higher margin, tighter stops. I don't want to overcomplicate and give you a triple level layered in approach. Once you know how to do, if you can throw a strike from the mound against anybody in the league, it's going to be real easy for you to get up there and look like you know what you're doing. So as these skill sets and tactics develop, if you can strike out anybody in the league, guys, just lean on back and enjoy the glove and who's next, right? So when you get there, it may seem like, well, there's 3 different things to potentially do between a managed future, between a higher level margin, tighter stop loss, and between a flash trade, a quick trade, right? As some of those may overlap, or just a day trade that we may say, a flash trade or a day trade. That may be style more than anything, and it may be dependent upon what type of technicals you're running into. But that would be one consideration now as we discuss this. Do you have a carry trade, and are you looking also daily at your day trades? Okay, what needs to be accommodated in your approach to the market so that you have the possibility for your carry trade? This would have been and is a nice example, and always will be, of a descending wedge. And what is the big thing about a descending wedge? We have an expectation of a recoup to where? Expectation recoup to the specific failed descending wedge apex. Boom. That's VIP. That's Bitcoin spike wedge tactic right there, okay? A recovery, it'd be the equivalent of a throwback, equivalent of a pullback on a pattern to prior resistance or support, but we focus on the apex here, okay? That's what we do. So Once you have that expectation, you can check off the number one requirement for your entry on, I'd say, a host of different tactics that we've discussed, in between maybe a managed future, right? In terms of scaling and laddering, right? Maybe a carry trade, right? Independent of the managed future, okay? Now your managed future may be something you want to knock the lights out once or twice a year on those. Right? You may want to knock the lights out on your managed future once or twice a year on those, right? You may want to knock the lights out on a carry trade every couple of weeks. You may look at the periodicity, okay? You may look at the frequency of price action in terms of what it's offering in terms of, if you were to have a carry up trade from here, if you were to have a carry trade and entry from, let's say, here, okay? As we are looking at the framework of the 1, 2, 3, let's say managed futures, okay? Let's say, again, maybe a situation you want that to ring the bell. You want to strike that batter out once or twice a year. Hey, okay, big time stuff, okay? Plan for it all year long. Now, accompanying assets moving at different times, maybe things become a bit more interesting, all right? A lot, maybe too interesting. Starting to think like, I don't know, maybe I need to get a broker. If you can get your broker to do all this for you, I tell you, if you sit down and tell your broker that you want him to do all this, he'd be like, I don't think you get it, man. Just think about this. But you can understand the opportunities in the framework of what we're discussing. Those big King Kong trades come along how often? Yeah, I mean, the nice trades once a month, every couple months on this asset, let's say just on Tesla or on Bitcoin or Solana or Matic or whatnot, they come around. Matic is a great example though, and before I finish this, between managed futures, between carry trades, managed futures, say long term, between carry trades, may last a month, 2 months. It may last a number of weeks, all right? So I'll let that blend and develop depending upon, if you're on a crazy altcoin right now, if you're hooked on a crazy altcoin, man, your carry trade may be like overnight maybe, right? I got a 18-hour carry trade, I'm good, right? And you may have literal trades every 2 minutes on the thing. You don't know, right? There may be some assets and equities that are moving that quickly that can accommodate that level of, kind of just a rapid fire interest. So everything is not fully negotiable, but you understand the structuring and the mindset. So all to say, lower entry, right? And it's a good discussion, lower entry, right? Carry trade versus, did you start to rescale in terms of managed futures here? Within the Tesla dynamics, it's nice to look at a price target of 300. It just is, and say, okay, will Tesla ever get to 300 again? Do we have any, let me look at the time, about 10 minutes left before equities close. But do we have any expectation, again, the expectation of a return to the upside or a pattern that has a strong probability of breaking a level of resistance across the top or, guys, support along the bottom. So as we navigate through that issue, it's not all one-sided. Yeah, not all one-sided in terms of that discussion, whether it be up, whether it be down. Participating in something like this is where things really start getting going as we were to consider looking at I just knew that was going to happen. The yard guys here. If he's too loud, you let me know. These guys they come service the yard like every other day or almost every day. I don't know why. It's okay. I haven't talked to them about it, but they just around this time too. Anyways, inconvenient. Nice place here in La Jolla. Shout out to all VIP. Shout out to Venus. Pleasure to be building with you in 2023 and beyond. Now, way to trade Venus. She can trade the lights out, guys. She's doing awesome, and we're having a great year. We're excited to be with you guys in 2023. So, looking at the framework in terms of when we identify. And you can apply this to the micro or the macro. When we identify a pattern like this, and when I'm telling you guys, when I am explaining to you that, hey, and the trick to this is you got to catch this bull flag. And you've seen us do this time and time again in the back. And I'm pointing to this and I'm like, we got a bull flag. In here, yes. Okay, in this level and zone, yes. Here, yes. In terms of identification of the bull flag in play, we talked about the parallel carry down, resistance to support feature on any bull flag. You apply this to everything that you are trading. to every coin, to every asset, to anything you're looking at. If you're trading corn futures, listen to what is being said here. Identify these early, because you're going to get into some issues in terms of having a longer term carry trade with managed scaling and laddering, managed futures. If you can catch it in this zone, great. A little bit less stressful, catch it in this zone, right? That's about the area you guys know all the way back through Ethereum, which is not something I prefer to trade, but all the way back through Ethereum, yes. This was about the zone we get into. Ideally, it's kind of comfortable in this zone. The problem is the further that you get into this higher probability, higher excitement move, you're kind of cautious against, let's say, increasing position size, and let's say playing that, it gets a little trickier at times to play that higher margin, tighter stop loss. You're almost afraid to lose it, right? You're afraid that this is just going to get going, and it did on Tesla. One curl around the top resistance, and it's just an example. We could go to Matic on this. Matic had a great bull flag, one of the first bull flags we traded in 2023. So pattern expectation, yes. As we were to look at and that's going to fold into the tactical framework that you pull, that you put in your toolkit. So let's discuss where we're at, particularly on Tesla, just so we can cover this. That's a nice look, right? And then we'll go through Bitcoin and some other nice, I guess, closeouts here as we round this out. We talked about NVDA a bit in terms of that fractional completion. It's like, the dealer's going to tell you, look, man, you win the hand, but I'm only going to pay you 50%, but I'll pay you right now. I'm not going to make you sit here at the table for the next 6 hours and battle me in the casino. You're like, hold on. So I win. You'd be like, yeah, but I'm winning. I won. I know how to play this. I'm going to do this. I'm going to beat you in the next hour. Well, the casino's just offering you 50% right now. Well, okay. You just may be the kind of guy who's like, forget about it. You tell the casino, I'm going to beat him, and I'm going to sit here for the next 8 hours, and I'm going to prove to you that I'm going to get the full 100%. You can have that discussion all day long. Bulkowski Encyclopedia Chart Patterns helps that discussion, doesn't it? It does help that discussion. But you just may say, man, I'm cruising on. I'm going to another table, right? If you want to go to another table, be like, maybe the pit boss over there doesn't hate me like you do. Whatever it is, you pit boss, you hate me. Like, you've been there, maybe. I don't go to Vegas much, but anyway, if we're looking at preceding level of support, flip to resistance, it even looks like we're time frame dependent. The assessment I'm going to make here is what is our probability here in terms of a completion to the upside? We would have to fail the 4 hourly over the 20 moving average and the top side band, standard New York Institute of Finance framework. We're going to have to fail this, okay? So we've got a mixture on, if we were to look at this, we've got to set up with an upside target. Do we have an upside target? Yes. Do we have a barrier towards getting there? Yes. Would it put us in a good framework to achieve beyond that 2%? Absolutely, right? We've got the full faith and credit of what, guys, of this cup and handle. And that's a nice pattern to look at a potential completion for a move, ideally of an additional 12%. If you own it lower, that's a good move, guys. If you've scheduled in, and once again, what is the qualifier on this? And identify this on everything you're trading. You're like, well, we didn't talk about it on this and that or anything. I want you to ask yourself if you have, what's going on there? Scotland in the house. Leon, boom, 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 boom. What's up, brother? As we were to look at the qualifier here, again, is what? On everything you trade. On everything you trade, what's the qualifier? Do we have a return expectation? Okay, or am I sunk? Do I have a 75% chance or more of going down? Those are tough to find. But do I have a 75% chance or more of going down? Or do I have a return expectation to the upside? That's your qualifier. Or maybe I don't like the patterning that I'm in, right? Do I have any kind of a target, any kind of a tactic to give me a target to the upside or the downside? I don't like being tucked up against a level of support. You guys know this. And to an extent, what is this that we're looking at on Tesla? It is exactly, nearly precisely, the situation on NVIDIA where for those not in the hedge room, I hope you're there soon, i.e. next week. We'll get you in the back there in the hedge room. Looking forward to Leon scheduling up in the hedge room. But looking at this, and we had to actually go, I brought you to accommodate this situation a bit more. I brought you the extended hours trading. The extended hours trading on NVIDIA gave us the 50%. Okay, so I'll cut to the chase on that. I gave you the extended hours trading, which was more which was more aggressive towards saying, hey, we've reached the 50%. Because we do have upside targets on this, still in a bull stance, guys. In terms of NVIDIA, we still do have upside targets. We'll talk about regular trading hours versus extended trading hours and how that's going to change your charts a bit, and kind of how to prepare for that if and such you do decide. So what we did was NVIDIA challenged us at the 50% level. Guys, Bitcoin does this daily. Okay, your altcoins do this all the time. Pay attention to the concepts here. So you're essentially at this break point here. Upside target, yes. Same as NVIDIA. Same as NVIDIA. We had that higher target, right? So no, we're over the 20 moving average. I know essentially New York Institute of Finance, et cetera. We're going to be looking at the top side band at least, right? And then we've got the cup and handle in play. But this is the same type of scenario. So what solves this issue is what? Lower entries, some kind of a carry position. If you don't have a habit yet of involving yourself at a carry level and allowing yourself to, and let's put this together, to trade that same pattern that you're getting the carry position on with a flash trade. Because what you're going to do is you're going to feel like you're just negotiating in and around a flash trade the whole time, or in and around a carry position the whole time, right? And you're going to say, yeah, but I have to close it. I don't want to close it. That's going to necessitate that you kind of open the book a little bit more, that you pay attention to, okay, now I need to accommodate the fact that I may want to take profits on at all my carry trade, and I still want to trade this bottom side pattern. So we'll work on and continue to explore this in terms of, and guys, this was a nice trade today. Congrats to all the VIP who traded this in the back. Very well done. After we consolidated around here, nice pattern framework. Not a difficult day on Tesla. But as we look at this and we close out, we're in the same position. It's like, well, the dealer's telling you, look, you won, I'm going to pay you 50% right now, or you can go for the big money and you might have to sit here for 6 hours. You're like, man, I like blackjack, but I don't like it that much. And you tell the dealer, and I really don't like you. The good thing is that for telling me that, but it's about accurate. And it's that opportunity to take, no problem. Nothing wrong with taking, I'll tell you this, and there's nothing wrong with taking profits. This is going to be the issue you're going to run into. The issue you will run into is your longer term trades, okay, that you're structured into from below, your carry trades, your big timer trades that you're scaling into and laddering. What's going to be the trade-off? Well, you're going to go through more returns to zero on those. You just are. You're going to go through, while you try and build up this huge trade or number of trades throughout the year, you're going to see them return to zero, right? And New York is closed. But good enough talk, right? Upside target, yes. Similarity to NVIDIA, very much so. Higher target, yeah, we got to pay about 50% on that, on the chart that I brought, guys. So looking at that framework, just understand that if you're going for the King Kong trade, if you're going for, and you guys know, and Tesla's a great example. We'll flip right over to Bitcoin in about 2 seconds since New York is closed. But you guys know, this pickup along here, man, this didn't require negotiated. I mean, come on, guys. You remember this hit down here? I mean, it was within a number of dollars of precisely what I brought on the line, but you would have had to play aggressive here, let it fall and fold here. If you don't remember the Tesla chart brought in the back, it's a great example of this, okay? Because your entry went to zero, but you are bottom fishing here deep in the well, guys. You are pouring down deep sea fishing here, right? You are digging down in. You're fine with it going to zero. Pick it up heavier, pick it up heavier. In the structure, the pattern, the architecture of the pattern is telling you that this could be just a gangbuster trade, right? So this is that one in the year, one in every, maybe twice a year, something like that, where you're going to say, okay, fine, well, now I'm up 180%. You're always going to be making a trade-off between taking your profits, accommodating that feeling that you have got to get up and out of this seat. The casino just offered me 50%, man, of what I already won. But they won't make me play another 6 hours or 8 hours. Same thing, guys. And not to knock on the casinos, but same idea and principle. It's like, okay, fine, but you just have to be prepared for things to return to zero. Some of the bigger traders that I have been with personally and traded with personally, they'll take 75% off the table and tell everybody to go home at some point, okay? But they will also hold heavy and go to zero. And as you see this unfold, as you participate in the markets, just know that trade-off is going to be there. How do we fix it again? In terms of this, how we fix it is knowing, A, we will have more flash trades next week. Without a doubt, we'll have more patterns. We'll have more opens on levels of support. More just nice patterning has been, guys, it's just been nice to see the market unfold a bit, to see a return to our specific wedge tactic. It's been nice. It's a validation, a confirmation. You guys got that right. Boom. So as we discuss that, just understand the trade-off. See if you can work in a tactic, a mental, some sort of a tactic that you would look at and say, okay, I've got the idea of the larger margin and the tighter stop loss. Throw at a few of them. Super tight loss. Tighter than you thought you could stop your loss. Stop it. Like, bam. Like, man, I can stop loss at this, because the next thing you're gonna realize is that, man, I can do this. I can really, really work on my precision. There's not a whole lot of people that are really, really working on the precision in the markets. Okay, so as we mold all of this together, as you come up with these additional, just the additional mental framework to charge into the market, guys, you're going to be just think and imagine how your trade diagnostic sheet's going to look, or the data that's going into your trades. How is it going to look now? It's going to start to look different, right? That's going to reflect differently in the outcome of your trades. And as those skill sets work into, I'd say just work into the betterment of your experience in the market. 1, we want you to enjoy the market. 2, we want you to enjoy your profits in the market. There are way too many things to, we go we go open a car dealership or a restaurant or plenty of ways to make $1 million. It's not difficult. It's not worth what it used to be. So it's just not difficult. So the idea is enjoy the market, enjoy your profits in the market. And so don't be strapped up mentally, emotionally, where you're looking at something and you're saying, and you're regretting, or you're tied up in a knot because, man, I've got this position, but I have to hold it. I have to hold it because this could be the big one. If you're doing that, it's easy. Get that position. Guarantee yourself, lock, step, get the position. And then what? Well, I'm also going to pick up a flash trade. Cool. Don't split the baby. Don't mess with the baby. Leave the baby over there, the carry trade. Pick up another one. Work on it. Pick up another flash trade. Trade the pattern just slightly out, going. Let your order pick up below. We're going to hope it's below, right, or above, right, if you're shorting. And don't throw yourself into that mix. Challenge yourself a little bit. Give yourself 2 positions to look at and be like, oh, okay, I see. That's a good approach. Let's talk a bit about Bitcoin. Bitcoin is famous at doing what? At making you think she's going somewhere. After she did what? After she just went somewhere. Right? She just went somewhere, and now she's going to keep going. This is where fire and ice is the king of the market. You guys know this, right? We could talk about all different types of everything you want to talk about, in terms of whatever indicator you want to throw at it. But it's like, well, just fire and ice is going to tell you to short, and and I'll just tell you, when we have this much on the pour down, you're going to look at your cap line, your capital exposure, which is RSI, MACD, and stochastics. That's exactly what it is. So you're going to look at your RSI, MACD, and stochastics, and you're going to be like, how could I miss this? How could I miss it? And it's the truth. In terms of how you could miss it, we just had so many levels that could have turned it around. And again, looking at the framework of the carry and the flash, and you start to think now, dawn on me and you, we got it, that what? Your carry trade and your flash can go in either direction. Hey. And then you can start to pick up your potential carry trades from the opposite direction, work into a flat hedge, etc. on macro, let's say macro indications, et cetera, and evaluations or assessments. And yeah, this becomes a pretty cool dovetailing in terms of the tactics that you can present into the market. So one of the hardest things to just know and to say is the following. Well, Bitcoin just made a move, and we're going to expect some consolidation and for Fire and Ice just to print some cash. We know that's what happens. Continually, without regret or resolve, what's the percentage, you guys tell me? What's the percentage of time that Bitcoin moves, drops, makes a big hit, and then prints money? I see traders who focus on Fire and Ice after a big move. It does well. You know this. You've got your micro time frames wherein you're getting some great flash trades. And then you've got your, you have to scale it up, and let's say your 30 minutes, your hourly, your 4 hourly. Forget about it. Forget about it. You guys know that, right? Forget about it. Beautiful, huh? Daily as well. Daily was a nice hit on this secondary bottom. Now, if you picked up here, and a lot of people did, and you waited through this number of days and you saw your position return to zero with a flat bottom, all the more credence to the fact that you've got to accommodate your need to have a carry position, potential catching the bottom in terms of that, and your flash trade. You find a way to pick up both. Go through the process. We'll address this a bit more. Just want to kind of open up the framework as we're thinking through these issues and applying it to the trade-off that's going to occur in your trade game. Those trade-offs are going to seem a lot more acceptable and realistic and I'm going to say trivial and manageable. Those trade-offs, those things that are bothering you in your trade game, the better that you get. And the more that you develop your tactics, the more that I'm talking with these things, they make sense. But the more you actually say, well, I'm going to do that this week. It's on my list. I'm going to do that this week. The more that you do that this next week, and then the next thing the next week, and we build on this, those the sweaty palms and the frustrations in the market, they're just going to be trivial, guys. And to an extent, they already are. You guys are very highly functionally operational in the market right now. You just are. You got a great set of tools. Fusion incoming, guys. Fusion. And shout out to Venus. Venus, thank you so much for all of the support and interacting with Ukraine. We have a dev team in Ukraine. What's up, guys? Shout out to Ukraine. Also in Switzerland. What's up, Switzerland? Hope you're both doing well. Ukraine and Switzerland. We hope you're doing well in addition. So in terms of the indicator incoming, it's going to be something. I don't want to put anything on your screen that's going to interfere with the levels that you have going on right now. Okay, I'm going to say the proficiencies that you have going on right now. So we will deal with this as this, guys. As we work it into the mix right now, we've covered a lot of other issues that are not a brand new indicator on your screen. So we will work into this over a reasonable period of time. I've been working on this thing for 6 months. I've talked with the experts in the machine learning who have told me, you don't know what you're talking about in machine learning. And then I've been the guy, of course, I went to the graduate school of mathematics in Duke. My first semester, knocking on the door of the dean, she made me come talk to her. And I said, you wanted me to talk to you? I'm here. She says, what? What are you doing? Well, I'm just here to talk. She says, no, you want to take a graduate advanced linear calculus course your first semester at Duke. It's a little bit much. Like, I have to take it. I have to take it. So when the machine learning guys say, no, you don't know what you're talking about, I'm like, really? Huh? Really? Let's dig in now. So that didn't complicate it or prolong it, but we got some things done in the context of machine learning that really opened up the framework of the residual of what you're currently accustomed to. It's really, that's why we called it fusion. We're really looking forward to, Venus and I are really looking forward to launching this for you guys. And for instance here, I don't know if we'll get this, let me see what I've got. But we'll, as you use it, you're gonna see, it's just gonna be exciting. I'm really excited. The 6-month project is coming to a conclusion. Some of that was pre-testing, evaluation, functionality, understand within TradingView, how much can we do? in the context of the limitations of TradingView. So it's been very nice. Appreciate all of your patience. You know that we have additional indicators incoming. You know those are on the way. And it's just, if there's an advantage in the market, I want to have a screen right there. You guys know I want to have a screen right there, right? That has that advantage on it, that is always right there, that is something that's on some desk of some guys in New York, at a hedge fund in Cali or wherever. I want to have that screen up because somebody else is looking at it. You got it, right? So in terms of that, and we've settled down in terms of Bitcoin. We're in a weekend mode. Very few weekends have we had significant moves. So it's kind of convenient to go ahead and say, okay, we've settled down. Okay, let's do our fire and ice. But we haven't stopped directing fire and ice since this drop. It's been profitable if you have been, guys, just ready, aim, and loaded, right? Ready to engage. So congrats on that. I know that you have done well with the discussion today on carry trades and your flash trades, right? Pick a trade up for today and pick up your carry trade. Period. Don't mix them together if it's causing you frustration and you're solely just like, you're just so stressed out because you don't want to let your carry trade go because that might be it. I don't want to exit it. Give yourself your carry trade that could last for a number of weeks. If it goes to zero, cool. Go to the next level because you can make money on your day trade, right? Your trade that you expect with a quicker frequency to it, right? Quicker open and close function to guarantee yourself some profits at the level of consolidation that you're in. That is a good approach. So in addition, I wanted to talk a little bit today about a reset button. Why would we need a reset button? Because every time we look at this, I have to tell you, every time we look at this, man, I miss that trade. Gosh, I miss that trade. Granted, and I'm not saying me, but every time you look at this, now, what did we miss? I'm going to go through this and you guys know I'm going to harp on this so that you learn it and you see as much as anything has made sense in the context of what I've discussed today. I want you to understand that those levels that we hit, you got it. Those levels made money. Now, Fire and Ice made money along the way down too, if you traded properly. Now, I know everybody wants the King Kong short poured out through everything. The daily gave that to you. Now you start to say, okay, wait, hold on. The daily RSI, MACD, and stochastic gave it to me? Gave it to you. Carry trade versus flash trades versus work in your style a little bit to the extent that you want. But now you're thinking, okay, well, I want a flash trade and I want my carry trade. I got it, right? So in the context thereof, it's nice to think about the action on the way down being profitable. You bet you guys. With the notion of higher, I love the fact that we did this as a group. I love it. That we went higher margin, tighter stop loss. I can confirm, okay? You could have taken a break at the higher margin, tighter stop loss, literally left it alone. Went down a couple $100. It cost me a few $100, maybe $600-700. Who cares? I mean, guys, yes, that's okay. It's like, yeah, I would have made money if I were there to execute it. You could have set your take profits as well. You could have set your take profits and actually just disappeared and made money going along on this. Are you kidding me? You got it. To me, that says more. Okay, the short. The RSI, stochastic, and MACD, your capital exposure line, had you short. Throw it on your long exposure, okay? Throw it on your long exposure. In terms, I'm going to say throw it on your carry trade exposure, not your long exposure, your carry trade exposure, okay? Long term, right? We'll work on more tactics on this. But as you look at that, I like the fact that we approached this with a precision laser guided guys, focus. It's awesome to work on higher margin and tighter stop loss. That is what is going on. That skill, if you can, you don't know the circles you're going to be running in, guys. You don't know the circles you're going to be running in. If you can master that, I'm telling you guys, you don't know. It's up there, guys. It's up there. Okay. I promise. Deal done. Let's do it. So we're looking for a lazy weekend on Bitcoin. You know that, right? What did we get on the hourly today? It was kind of nice. On the hourly, we had the specific. Let's talk about what we went through today, just to discuss the price action a little bit. I know it's probably getting late in Europe, so shout out to VIP Liam in Scotland. What's up? In terms of the bear flag, it's just going to repeat these lessons. It's like life, huh? What did we not like about the bear flag the other day? Noted any specific preceding pivot to the left. Be careful of your bear flags, okay? Demand zone structure, you guys got it, right? Preceding pivot to the left, we're going to be a little more cautious and pay a bit more attention to our fire and ice. You guys got it. Kernel regression bands, rocking it. Bottom of Bitcoin bands, period. Only guys who got the bottom of Bitcoin, what's up? And yes, carry trade versus flash trade. I see. Carry trade versus flash trade. Both of them. Hey, what's going on, guys? You're used to watching it go to zero. Pick it up again and get a little bit lower, great, right? In terms of the, we'll work through all that, guys. We're working through it. So looking at the framework here, what do we have on the hourly for Bitcoin? We had a nice, as we look at this head and shoulders. I brought it as a head and shoulders, but it just was real close, as you guys, we talked about this yesterday in the video, looking at the recovery to the specific neckline. But you can see the left shoulder, the head, the right shoulder in this zone. Okay, so as you look for a potential pick up at a preceding level of interruption, a pivot to the left that could interfere with your perfect bear flag you have laid out, and everybody wants to go short here, right? It is shorting it down, and then whoops, we didn't plan for the maybe this consideration on the lines. Always check your lines, check your candles as well. Look for your throwbacks without a doubt. This was a nice recovery and potential blackjack. For a potential blackjack, we want a flat bottom support. We'd like a real flat bottom, to tell you the truth, and we want that single pass through. So we call it a blackjack because, and this just got me because it's not a double double bottom here, but we like that 2-1. Okay, the double bottom, the 2, the single pass through 1-2-1 blackjack. Boom, you guys got it. What is NVIDIA doing right now? Well, market is closed, but we know NVIDIA. Where do bulls become interested in descending triangles? Find a descending triangle. The last thing you would think that the bulls, listen, guys, the last thing that you would think the bulls would be excited about. They're not VIP. They're just not. Let's go. All right, we have a topping formation. Sure, we have a descending triangle. The percentage of these that go down through the floor and complete like 200% on a descending triangle, it's unless you're dealing with a really liquid asset or something like that, maybe an altcoin will throw that at you. These are good, guys. These throwbacks are awesome. So we have that double bottom on NVIDIA. NVIDIA a little bit tricky. Has to be a little bit tricky for a challenge, right? But that double bottom single pass through, that 2-1 blackjack 21, right? You got it. So good stuff. Good stuff. We're still up and above. And just to bring that home with the tactic in play on Bitcoin today, you see that double bottom single pass through. So ideally, we'd love to get up and above. Let's dig into the details on and the reset button. We're going to talk about the reset button. I was going to say that. The structural framework and mindset that is required in the market. You hear this all the time, and the VIP, you have watched that video that I gave to you. Do you guys remember that medical video that I gave to you of the amount of involvement and experimentation they have done on individuals who trade, and what visual stimuli and what actual price movements increase the heart rate, get the hands sweating, get the cortisol flowing, the fight or flight senses engaged. Literally, you have been dissected like a piece of material. Literally, like a piece of material to be exploited however so choose if we want to flash up, down too, guys. We want to flash up this on the screen. It's all been tested heavily. You know this. So I bring that up in terms of the reset. What do we need a reset button for? First of all, you need to make sure that you can reset in the market 100%. You need to make sure that your current levels of exposure and your tactics involved with those levels of exposure are going to allow you to reset. Period. If you are in a position beyond, guys, if you are ever engaged in something and you hear a little small voice say, well, this would be beyond. This would be too much. This is too much risk. If you don't listen to that voice, it's a self-destructive enterprise that you are engaged in. Don't do it, guys. We love to trade. You like to really trade. If you just look at it as something to do, and I got better stuff to do, you might do that to yourself. But when you hear that little voice, okay, when you do the calculation, you look at the level of risk, pay attention to it, guys. So the first thing about a reset is you need to be able to gauge your current tactics at a level that you know you can reset. It's no big deal. And you make that assessment, but do you really make that assessment looking at your exposure? Looking at and for you, it may be your carry trade. Honestly, it may be your carry trade, and you're deciding like, okay, look, I understand that I'm going to get this trade once, this level of profit every year, once a year, maybe twice a year, maybe once every 2 years. But look, you may just look at yourself and say, look at this, man. I've got, I'm up, let's say I'm up $890,000 on this one trade. It's like it's a carry trade, but that's it. I'm out. Or you're up 2.5 million. You might be up 2.5 million in a day. Just it happens, So as we were to look at this, make sure that you're capable of resetting is the bottom line. Figure into that what's reasonable for you and how it is reasonable for you to operate both on your carry trades. Guys, don't push it too much. You don't have to beat up the world in the market, right? Sometimes it's a good challenge for you. You're squared away mentally to try and achieve that. But don't push that envelope too much to where you can't wake up and take a fresh look at the market. And what do? We want to enjoy the market. We want to enjoy our profits in the market, right? So that's the first part of a reset button in the market. Make sure you can operate to where you can reset. It's no problem. The second real key to that is if you've got the finance portion of it down, the risk exposure portion, read New York Institute of Finance. Don't take my word for it. You read them, you tell me if what matches up in terms of, if everything matches up in terms of what the pros are being taught. And yes, the guys that go to Wharton, guys that go from everything from Stanford to Harvard, business schools, go to New York Institute of Finance to learn to trade after they go to business school. Okay, so looking at the framework, make sure that you have the ability to I'm going to say manage your risk levels, to manage your levels of exposure appropriately. And it's not just, I can't do that. I can't do that either. No, you need to strike the balance, be aggressive enough to participate, enjoy the market, enjoy your profits in the market. You're going to have to we do our TA homework without a doubt. That's a big, huge part of this. So first of all, that assessment, let's say just the risk exposure, the ability to also understand that the market, and this will help with your enjoyment of the market, understand that the market's going to allow you to reset. Make sure you're trading something that's going to reset in terms of the ability to have additional trades. Like if you have a reset button, hey, good. It's a lot easier when what you're trading is offering you additional opportunities to trade. That's why we trade equities. We get into it. It's nice, fresh stuff every day. May surprise, maybe a little difficult in the beginning, work its way out, but the next 5, 6, 7 hours, it's going to give us a pattern, give us a trade. You guys know that. So first part is kind of about management in terms of expectations, how you're going to lay out your style, right? Make sure that you're capable of being reset. The second issue is going to be, are you trading something that's actually going to reset? Yeah? Or is this the only move you're going to get, and rightfully so? You're like, the cards are this casino is cheating. You're going to say this casino is cheating. I know for a fact the guy that works here told me there's only one blackjack in the whole deal. Yeah, there's eight decks here and there's only one blackjack. So you're sitting there. It's like, you'd be like, I've been here for 4 days. I still haven't gotten the one blackjack. But as you would say that, you'd be like, if what you're trading, to get back to it, this is serious, guys. If what you're trading is only going to give you one opportunity to catch anything of value, then rightfully so. You talk about FOMO, you're going to be upset, right? So make sure, aside from the management of your position, is making sure you're going to be capable or able to reset mentally. Make sure also what you're trading is going to be able to allow you to really reset. Okay. That's important. As we were to look at that, Bitcoin definitely does. And the third part of this, I'll just say the third part of this is to make sure that you're not spending any energy on this. If you wanted to catch the short and you didn't, forget about it. Forget about it. Because every ounce of time that you are spending looking at this and you didn't catch it, you already know what was there, how you could have caught it. It's going to be that way on almost every single move. If you guys were working on a different tactic on the way down, leave open the possibility, please, please, please leave open the possibility that on the way down with the price action we did see, just engaging in the high margin, extreme levels of precision, tight stop losses, that you could have made more. Maybe you could have made double what you typically would have made catching that short. Okay? Your standard trade amount on that short, man, you're going to beat yourself up over not catching that. As you progress, leave open a reset button, leave open the possibility that you will learn to trade that long, and you'll make twice as much as what you would have normally made up to this point, shorting it. If you can mentally get there, refine the tactics that we're plugging into here, that we're digging into, that starts to look okay. What you just went through, that process, you didn't miss anything. That's a building block into a different level of operation. So reset, boom. Because that little voice on your shoulder, a little whatever on your shoulder, is going to tell you, I missed that, we missed that, what? No. Where is the equation for the higher margin, tighter stop loss, getting on the map with the exchange in terms of your data flow and what you're presenting in? Bam, bam, bam. Oh, we got a player here. This cat's going to catch some trades, right? Work on that profile. Okay, work on it. Let them know what you're doing. Yeah, work on, hey, I'm going to make twice as much on the way up. Yeah, I'm going to make twice as much on the way up during this move, quote unquote, down. All right? Watch it happen. So that's a good reset in and of itself, right? So management of position, management of risk exposure, you got it, right? Making sure you're going to be capable of resetting, no problem, to enjoy the market, enjoy the profits. Making sure the asset that you're trading, making sure the asset that you're trading is going to allow you to reset into some new patterns, some new dynamics. It's liquid, yes. And just working into the framework of the reset button in terms of needing to be able to see the market a bit differently than this. Just what is it? It's almost, I don't want to say lazy, right? It certainly would be a challenge to say, okay, legitimately be upset. I'll let you be upset. You let me be upset if you just flat out missed this. If you don't even know how you could have caught it in the first place, you just missed it. If you're working on something else along the way here, boom. What a great challenge in terms of the solution here for any fear of missed opportunities, right? Any regret on any chart, anything. Can you imagine every time that something looks like you didn't catch it? Well, I just figured out on that next move how to make 2 times as much as what I was trying to make on this. So let the perspective be part of the reset button. Boom. I just pushed it. Deal? Deal. And we'll talk about some other stuff in the back, guys. Wanted to come to you a little bit and just talk in terms of what we've been going through as the group in terms of trading. Nice talk on Tesla. There's lower entries. Huh? It's just, it is what it is. What do you need? Expectation of return to the upside. You're going to get it every time? Heck no. No, you're not. But within the degree, I'm going to say, as the chart shows you guys, as you're and as we're shown in the back, we do a lot of empirical work, a lot of technical work. So most interesting part on Bitcoin now, that's probably not on everybody's radar is this. You guys know, I believe we're looking probably 4 hour, etc. That's going to be an interesting level to try and hold, for bulls to try and hold, and we're on the daily. So we've got differentiation. Appreciate that on the 8 hour, 4 hour. We just got a little bit of an extra grind in here if we go to the 4 hourly, for instance. Let's just stay on the daily and turn on the candles. So a little bit of an extra flex and flow through this zone. We can't call the bottom right now. We just can't call the bottom. We're going up. The issue we're dealing with, we're just going to abandon this 200 weekly. I mean, this is an issue. We're just going to abandon the 200 weekly. Do you have an expectation of returning to the 200 weekly at some point? Yes. Yes, you do, without a doubt. It's still heading up, which gives you a favorable zone of consideration as you look at that first and, let's say, fundamental requirement of a return. Yes, that 200 weekly has been like solid gold along the way. You know that. It has literally been solid gold along the way. So at some point, if we give it up, we'll have some expectation of a return. And believe it or not, as you guys know as well, the longer we can get through, or let's say the longer or lower that we can get, not necessarily longer, but technically speaking, yeah, the longer that we can go. I tell people we want it to go lower for longer. They're like, what? It's like, what? Well, the longer is important. It's like a runway. We go higher. They don't get it. So as we look at it, it's like we'd like to go lower for longer. Here, we'll just get the runway down. But yeah, the 200 weekly gives you the first feather in the cap in terms of, or the qualifier that yes, we have an expectation of return. Lower is better. Let's dig into the details. Let's get into the pattern framework here, and let's just challenge ourselves. I'm going to tell you, you're leaving some money on the table if after we make a good move, what's hitting? Fire nice. You guys know it's nice. It's working. So we got probably a slow weekend. Expect some volatility on Sunday. That's the way that the weekends have been working out. I hope you enjoy your weekend. And shout out to all the VIP. This is London with Bitcoin Spike and VIP Trader. Talk to you soon, guys. Thanks so much. Bye-bye.